Hello and welcome back to your South King County real estate update. My name's Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm here to deliver your South King County real estate news for the week. I'll go ahead and jump right on into the slides. So today is June 3rd, 2022, almost halfway through the year. And let's find out what happened this week. In the last couple days, I've had a couple clients reach out with homes that they were interested in. And I thought when I was booking showings for this weekend, I really thought it was super interesting what was happening with the showing traffic. So I had two different, very, very different properties. One is a luxury listing with a view of the Sound. The other is a double wide manufactured home on its own land. So we have a high price and a low price listing that we're looking at. When I went in to book the showing for the low price listing, it came on the market yesterday and I was going through this morning and booking the showing, and we did not have our pick of times. Let me tell you, there was a lot of showings booked. Almost the entire day today was booked. There was several tomorrow. So we ended up locking in an appointment for tomorrow, but if we'd waited much longer, I'm not sure what time slot we would have ended up with. We might have been trying to look at it as it was getting dark, and like that's not the type of property that you want to look at when it's not super bright outside, because if there's any sort of land associated with the property, you want to be able to look at the land. So I did think that was interesting. And then when I flipped over to the luxury listing to book that appointment, I had my pick of the lot. There was like 3 or 4 showings booked, it looks like, for the next few days. Both of them came on the market within maybe 5-6 hours of each other. And so just to see the difference in demand in the lower price point versus the higher price point, I just thought it was super interesting, because I mean, this luxury home is gorgeous, but apparently not in the price range for a lot of the people that are still shopping in the market. So I just thought that was interesting. We'll go ahead and jump back on into those slides. So U.S. home prices continued to surge in March, but slowdown seems to have started. So this is an article based on the CoreLogic Case-Shiller Price Index. And these stats are very accurate, but they're lagging. So we just got our March numbers, even though it is now June. So it lags a couple months. A measure of these 20 cities, including the Seattle area, climbed 21.2% through March, following a 20.3 gain in February. And this is a year-to-year comparison. So from February to February, we had 20.3% gain. From March to March, we had 21.2. Seattle area specifically, year over year, we were up 27.7%. So well over that national average. Seattle prices increased 5.6% from February to March. I mean, this is a number on average, we'd expect to see as an annual gain, not a monthly gain. 5.6% in a month. That's crazy. But if you look further out from Seattle, that doesn't necessarily play into effect. Seattle had that depressed economy during the coronavirus, so they're escalating at a quicker rate now. But the local housing market has started to cool down by some metrics. So home buyers are facing a worsening affordability situation, with mortgage rates hovering around the highest levels in more than a decade, and price appreciation going kind of nuts. It has been a really great year for homeowners, and more of a rough year for the home buyers. However, we are starting to see things start to shift. So buyers, there is good news on the horizon. Also, lumber is the cheapest that it's been in 7 months as the housing market softens. So here's another thing that's related to the housing market as a ripple effect. The ripple effect of real estate is more than I probably comprehend, but real estate affects so many industries, but lumber is one of the main ones for sure. And we have heard for the past couple of years about the high lumber prices. Lumber has fluctuated a lot on its price, but in a general upward trend. So now we are seeing the lumber come down a little bit, and we're at $604 per 1,000 board feet. There were some recent comments by JP Morgan Chase that were not very good for the lumber markets. They compared it to an economic hurricane, given challenges including tightening monetary policy and Russia's invasion of Ukraine. And they're predicting that lumber prices may fall even further to $400 per board feet in the next 2 months. So homeowners, if you're thinking about building that deck, maybe think about buying that wood in the next couple months. There was a report that came out from Bank of America recently. Rising home prices push Seattle home buyers to get creative. So there was a lot of stats that I just found very interesting in this. High home prices in the Puget Sound areas have home buyers getting creative so that they can actually buy a home. This is probably the most shocking stat that I saw in this article. 13% of area home buyers have used cryptocurrency to make a down payment, according to the report. This number is significantly higher than I had expected to see. 13% of area home buyers. I knew cryptocurrency was becoming more common in real estate, in the real estate industry. I haven't really talked about it much on this channel because, well, it's more of a finance thing. Usually, like, that's how you pay for things. But they're paying for real estate now with cryptocurrency. And this is, I guess, it's just the number. It's not shocking that it's happening, but the fact that 13% are using cryptocurrency to buy homes, I found pretty shocking. I'm curious about your take on that. Make sure to put it in the comments below. The report shows that 53% of Puget Sound area home buyers would be willing to make an offer above the asking price. I think that's a little low. So this article has some stats in it that were just like irking me, I guess. I don't know necessarily how accurate this is. Bank of America, this is a survey of like 2,000 people. So who knows how accurate this actually is, since they didn't have a very big sample size. But 26% would offer 5% over the asking price, while 18% would go 5 to 18 over the asking price. Those numbers are a little more in line with what I would expect. The rising prices are having people move outside of the city limits. Again, another thing that is something that we have seen for the past couple of years. But nearly half of the people looking for homes outside of the city said that moving from the city outside of the city, crime was a primary reason. The person that was interviewed for this article doesn't expect a potential recession to dampen buyers' interest, and I tend to agree there. Really, homes has come to mean something so much more to people since the pandemic than it used to. So that buyer demand, I don't think is going away for a number of years. For a potential home buyer who is looking to sell their house, this potential home buyer, their rent was going up $1,500 a month, or landlord was going to sell. And this is something we have been seeing across our region. Rents are rising at astronomical rates, just like the housing prices. However, once you buy a house, it locks in your mortgage rate, your mortgage payment, and you lock it in. Whereas rent, your landlord can decide to increase it at any point in time. And Bank of America's report was based on a national online survey of 2,000 adults who currently own a home or plan to in the future. But recession does not equal a housing crisis. So even though people are starting to talk more commonly about an upcoming recession, it is something that is not going to affect housing prices in the way that people think they will. A lot of people are remembering the 2008 housing crash. Right. And yes, that was horrible. It was housing that caused the recession. That is very much not the case now. There has been a lot of lending practice changes. It's just really not the same setup. So what this proves, 4 out of the last 6 recessions, home prices have appreciated. So even if a recession is coming, don't expect home prices to go down. Just don't expect that. If they do, chances are it's going to be ever so slightly, because the only time that it was a big gap was the housing crisis, where housing caused it. And like I said, things have changed since then. And today's housing market is nothing like it was in 2008. So how do home sales affect the economy and job market in your state? This came from the National Association of Realtors. Real estate is how the middle class builds generational wealth. On average, generational wealth is built through real estate acquisition and appreciation. It really varies from state to state how much homes cost and how much they appreciate, and local market knowledge is key if you're looking for a home, because it varies so much from area to area, state to state, and all that. So the economic impact on a national level, each home sale generates $113,000 of economic impact. In Washington, that's up to $187,600. So Washington is ranking 5th in the highest income generation states for home sales. And that breaks down to a number of things: income generated from real estate industries, expenditures related to the home purchase, multiplier of housing related expenditures, and new home construction. So these are all various things that play into the economic impact. And you can see that they're all pretty significant. Jobs impact of an existing home sale. So home sales create jobs too. Hello, real estate agent, one to speak. But using this ratio, 1,000 home sales generates 2,000 jobs. So the National Association of Realtors backs this number. Since all real estate is local, the impact of a home sale is even larger in some areas, Washington included. We're after Hawaii and California, but the impact of a home sale economically radiating out in that ripple effect is pretty significant. In Washington, we actually generate 3 jobs on average for every existing home sale. And if we look at showing traffic, so this is our national buyer metrics for North America, you can see that we had this big dip in showings, but it has ticked back up ever so slightly. I kind of did expect this over the holiday weekend, that we would have a little bit of a dip in showing traffic and hopefully a little bit more of a resurgence after the holiday. And that brings us to our Market Stat Minute. We did increase in new listings as predicted, and we are at 1,100 new listings and 704 pendings for the last 7 days. So our new listings are far outweighing our pended listings. So that means there is some stuff to look at out there. And if we look at our local area metrics, we see that Renton, Kent, and Auburn have more new listings than pendings, where Federal Way, our pended listings outweigh our new listings. So if you're looking to purchase a home in South King County, Renton, Kent, and Auburn may have a few more options for you this weekend to look at than Federal Way. For Southeast King County, we got our monthly recap from John L. Scott. Overall, for all prices, we have a 0.7 month supply. So 81.9% of homes are going pending in the first 3 days. Let me remind you that while this still says extreme frenzy, this is a higher month supply and lower number of homes going pending on an average than we have been seeing recently. Southwest King County, we have 0.5 month supply, so a little bit less supply for the demand is available, and 83.8% of homes are going pending in the first 30 days. And if you'll remember, last week we had an average mortgage rate of 5.1%, and this week is almost the same at 5.09. But if we bring it to today's interest rates, Mortgage News Daily says that our average mortgage rate for today is 5.44. So it is up a little bit since the beginning of the week. If you have questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area that you're interested in. Let's just get that conversation going. If you have any questions about anything that we've talked about today, please feel free to reach out. I would love to have that conversation with you. Thank you so much for joining me. I will be back here with your South King County real estate update next Friday at 3 p.m. See you then.